So let us learn about what these accounting terms are. So in this chapter, we shall be talking about defining various accounting terms and identifying these terms through case studies to give you a better understanding. Now, the entire accounting structure rests upon four major terms, which are assets, liabilities, revenue, and the fourth is the expense. Now, the main accounting terms that you will come across when you prepare the accounts and when you prepare the financial statements are capital, drawings, assets, liabilities, revenue, expense, expenditure, profit, loss, purchases, sales, stock, receivables, payables, debtors and creditors, and the term debit and credit. Now, let us start with the various accounting terms. First is capital. Now, capital is the amount invested by the owner in the business. So, it is also called as the owner's equity. Now, what is owner's equity? It is the owner's stake in the business. It shows how much is his investment as assets in the business. So, this constitutes capital. Second item is drawings. Now, drawing constitutes the amount of cash or goods withdrawn by the proprietor from the business for his personal or domestic use. Now, many a times the proprietor may use some of his products for his own personal use. That is referred to as drawings. For example, a furniture manufacturer may use furniture at his home for his personal use. So, that constitutes his drawings. Now, a very important accounting term is asset. What are assets? Assets is anything that is owned by an individual or a business. So, they constitute the possessions and it has a value attached to it. So, the assets are the possessions that are valued in terms of money. They are the properties of business like land, building, machinery, furniture, stock, debtors, cash and bank balance. So, all these items have a value attached and they constitute of the business. Now, the assets can be classified into many categories. The categories can be fixed assets, current assets, tangible assets, intangible assets and wasting assets. Now, let us learn about the different categories of assets. First is fixed assets. Fixed assets are the assets which are acquired not for the purpose of reselling, but for the purpose of use in the business. So, their basic objective or purpose is to increase the earning capacity of the business by using them. So, they are deployed by the business for the purpose of generating more revenue and they are not there for sale or disposition in the near future. They are for long term and the business is going to use them for a longer duration of time. So, example of fixed assets can be land, building, machinery, computer, vehicles, furniture, etc. Next is current assets. Another important classification of assets is current assets. So, current assets are those assets which are or which can be converted into immediate cash within a short period of time, and this short period of time is generally 1 year. So, these are the assets that are possessed by the business for a shorter duration like cash in hand, bank balance, debtors, stock, bills receivables, etc. So, these are some of the current assets. Then we talk about tangible assets. So, these are some of the examples of tangible assets: building, machinery, furniture, computer. Now, next category is that of intangible assets. So, intangible assets in contrast to tangible assets are those which cannot be seen and they do not have any physical existence and you cannot touch them. So, these are some of the patents, goodwill, etc., and they come under the category of intangible assets. Another important category is wasting assets. So, what are wasting assets? Wasting assets are those assets which are natural resources. That is, they are extracted and consumed as raw materials like mines, oil wells, quarries, etc.